Let's bring in James Liu, founder and CEO of Clearnomics, a market insight firm for the financial sector, to really break down today's initial jobless claims numbers. James, when you look at these results, of course, you can say it's positive news just because it is a decrease from last week. But what is your kind of snap reaction here?
Yeah, hi, Melody. So in general, the economic data across the board are telling us that the economy is successfully reopening, and there is essentially light at the end ahead at the end of the tunnel. The challenge here is that we're basically not out of the woods yet. So you look at these jobless claim numbers, and it's a reminder that there are still over 20 million Americans on continuing claims, getting claims each week. And this week, it's essentially unchanged, about 1.5 million new initial jobless claims that were filed. So over the long run, we think that the economy can in fact recover. You saw that in retail sales this week, where some sense of consumer confidence is coming back with people willing to open up their wallets. And you are seeing, for example, the latest jobs report where furloughed employees are coming back as well. So we do think that there will be an economic recovery. This is essentially, I hate to call it this, but the best case scenario that we would have predicted back in March when it was unclear what was going to happen to the economy. And right now it looks as if we are on track to be able to get back to some semblance of normalcy, similar to what we had before the COVID-19 crisis.
Of course, Fed Chair Powell has kind of reiterated this idea that it will be an uneven recovery, right? So when you look at even the income bracket, there was some interesting research out of Harvard yesterday that showed that folks on the upper echelon of society are not actually returning to their spending habits pre-pandemic, whereas folks who perhaps received that stimulus check, they are infusing money into the economy. Therefore, we see that increase in retail sales. How do you anticipate perhaps the folks who were big drivers of the economy with big ticket purchases? It's so different, right, from the previous recession, where the things that were the first to go were cars and homes, whereas now it's discretionary spending, which is really allocated to folks who are in the top bracket of the economy.
Yeah, I think that's right. You are seeing these big disparities across the economy and across the entire recovery, and that is playing out in the stock market as well. So, those folks who were able to get stimulus checks to be able to be put on life support, either by the Fed or through the CARES Act, for instance, in Congress, that does help those segments of the population. But obviously, if you look at jobs, for instance, some jobs are going to be much slower to recover. We did see new restaurant and retail jobs come back last month, but it's not even close to the number of jobs that were lost. So there is going to be this disparity across the economy, and we are seeing that in stock market actions as well. So you have big run-ups in tech names, for instance, that either were not really hit hard by the COVID-19 crisis or actually benefited from the crisis through remote work, teleconferencing, that sort of thing. I think the key for most investors, though, is that the market generally doesn't wait till the situation's perfect. All the market cares about is that there is that sense of we can return to normalcy at some point, maybe even if it takes quarters or a year, that we can actually return to that sense of normalcy. And what the economic data show us is that obviously there is still a lot of pain out there. Many Americans are still struggling in this crisis, but there is a path to getting back to where we were before the crisis happened.
Some other data out this morning from the Philly Fed, the manufacturing numbers, it of course gauges activity in the mid-Atlantic region, but there are some glimmers of improvement there, right? Business conditions rose to 27.5% in June from the negative 43.1 in the prior month, and even, really exceeding consensus expectations here. Should we take this seriously? Is this something that you are looking at closely when it comes to the recovery?
Yeah, I think those numbers are incredibly important because they gauge how businesses feel essentially about the recovery. And so clearly it doesn't tell us that everything's going to return to normal right away, but it does tell us that many businesses are willing to reopen, willing to rehire, and of course, that'll help jumpstart the economy. So we see that across a number of different surveys on the business side. I think the missing piece here going forward is going to be on the consumer side. The consumer, as we know, is a big, important part of the economy. We saw savings rates spike for obvious reasons during the crisis. And the question is, will consumers be willing to open up their wallets from here on forward? And a big part of consumer confidence and consumer sentiment is not only do they feel comfortable returning to the office place and therefore, feeling more financially secure because they have that paycheck, but do they feel more confident going into stores, starting to spend again, especially as you pointed out, there may have been some big ticket purchases that they may have delayed. Cars, washing machines, home appliances, big discretionary items. Will they feel comfortable basically going out there and making those purchases now, and therefore helping to jumpstart the economy. We're still waiting on that data, but that is going to be the key to the recovery from here on out.
Thanks so much, James Liu, founder and CEO of Clearnomics. We'll talk to you soon.
Thanks, Melody.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.